Buddy. Good evening, everybody. Hello.
Good evening, sir.
Hi. We'll just wait for another 2-3 minutes because a couple of them are kind of joining. Can you just hold on for another 2 minutes, please?
Sure.
All right. Thanks. Good evening, everybody.
Good evening, sir.
So, how was the New Year celebration, sir? How did it go?
We went to temple, sir. That's all. Nothing special.
Okay.
Okay, sir.
How about you, Guru,
How are you?
Ranjita? All good, sir. Thank you.
Hi, sir.
Hi, Ranjita. How are you doing?
Good, sir. Happy New Year.
Wish you the same. You are in Bangalore or you're in your native, Ranjita?
Bangalore only, sir.
Okay. So how did you celebrate? Where did you go?
No, sir. Just went to temple and relaxed at home.
Okay. How about you, Nikit?
We just had a prayer at home. And,
So you celebrated at home.
yes.
Okay, nice.
I wish you a happy New Year, by the way.
Wish you all a happy and prosperous new year. Let this year bring a lot of good things to you all.
Thank you, sir.
Pradeep will start sharp 6:10. Pradeep? Yeah, I think you're on mute.
Yeah. Good evening.
We'll start, Pradeep.
Good evening.
Good evening, sir.
Happy New Year to all.
Yeah, thank you, sir. Wish you the same.
Thank you so much. So all have opened your Demat accounts?
Oh, not yet, sir.
Yes.
This weekend I will open, sir. Tomorrow. I will.
Okay, because what happened is whenever the class goes on, maybe you could trial that with certain what are the strategies or the tools what we mentioned that can be implemented and for testing purpose. You could test that with those tools.
Because tomorrow I'm applying for SIM, sir. That's why.
Oh, okay, local SIM is it?
Yes, sir. Yes, sir. That's
Okay. When are you planning to return back, Srinivas?
19, sir.
Oh, is it okay? So let's see how fast we can cover the most of the topics.
Okay.
And you'll be able to attend the training from there as well.
Yes, sir. Friday I can attend. No problem.
Right. And Saturday, are you how you play on Saturdays?
Saturday, no, sir. Saturday full-time office, sir. Morning 7 to evening 6:30.
Oh, is it? All right. Okay. So
Yeah,
evening
only
6 o'clock,
Friday.
8 o'clock here, is it?
Yeah. 7. Indian time 9:30. I am free, sir.
Oh, okay.
2.5 hours difference, no, sir. That's
I
fine.
know, yeah. So only on Fridays you're available, right?
Yeah, yes, sir. Friday only.
So let's plan something that way. Maybe
Okay,
Fridays we'll try to have a maybe early session, something like that.
Okay,
Friday
sir.
evenings, something like that we can plan.
Okay.
Mr. Sinu.
Hello?
Mr. Sinu, once again.
Yes, sir.
I heard that now the UAE has changed their holidays to regularly.
Yeah, Saturday, Sunday, sir. Friday off day,
Okay.
Saturday, Sunday. Only UAE only, sir.
Okay.
Not, all other GCC remains Friday only.
Oh, okay.
Only Dubai only they changed. Emirates.
Oh, okay.
Friday off day, Saturday, Sunday holiday. 2 days.
Okay.
Like Europeans, like that.
Oh,
Same.
so Friday you work, is it? In UAE, Friday people work, is it?
No. For us, Friday only 1 day holiday. Dubai,
Okay.
Friday half day. Saturday, Sunday, 2 days holiday.
Oh, so almost 2.5 days, is it?
Yeah, yes.
Oh, okay. Super.
Weekly 5 days concept, but 4.5 days only they are working.
Oh, okay. Amazing.
Because Friday namaz time, so they pack up afternoon itself.
Oh,
That's all.
right. Okay.
That's right.
So I was thinking all our understanding the chapters. I mean the classes what we conducted till now. I think most of you are clear with the
Last session I didn't attend. I missed the class. Last session I think.
which session.
Last session I am not in.
No, Saturday we didn't have the
class.
session.
Okay. Then no
Actually,
problem.
that session is happening today.
Okay.
Okay, then one more session happened next
Postpone.
time, because I think what happened is most of them couldn't attend on Saturday, so we had cancelled Saturday session to today.
Okay, sir. Then
So,
continue.
yeah. So I think we will have a continuation in the same class. You'll understand.
Yes.
So, Joseph, is anybody else supposed to join?
Anil will take another 5-10 minutes time, but then we'll start off.
Yeah, we will try to brush up the yeah. Okay, let's start off with the session. Okay, this is what we had discussed last time. Why is it called a stock market? The stock market is, since it's called a stock market, since other not only the shares, even the other instruments like your derivatives, your commodities, your currencies, all are traded in the stock market. Hence, it's called as the share market. Hence, it's called as stock market. And why do we buy share? We buy share on a long-term basis for a profitability. The reason is almost any good companies has always been growing over the years. So hence we buy share for a long-term basis where we profit out of it. Then I gave a small example of what a fundamental and a technical analysis is. Fundamental analysis is to understand the depth of the company, who are the owners of the company, how the company is performing, and how is your business happening, and what is the growth available for the companies. And technical analysis is nothing but the current activity in that particular company. For simple example, how many people are investing in that company. The short term, is there any profitability happening, or is there any event happening in the company? Hence, we can enter for a short term and come out of it. These are called technical analysis. Fundamental is purely data based, and technical analysis purely chart based. You would have been seen those charts that mentioned to you, the candlestick chart. Technical analysis purely chart based. So by seeing the chart, we'll have to analyze what is happening in the company. Then we had spoken about the common jargons, a small introduction which we given to you, because what a buy and what a sell is. Okay, what do you mean by long? What do you mean by short? What do you mean by square off? What is an intraday? Today, we will just start off with the basics of fundamentals. But before that, I would like to give you a small snippet about what trading is in stock market. Okay, I mean, just to give an indication, the reason is, unless you don't understand how does the trading and investment work, you'll not be able to see, you'll not be able to correlate a lot of data going forward. So I'll give you a small indication. How does people survive everyday basis in stock market? I mean, heard a lot of people saying that my livelihood is stock market. I live with stock market kind of stuff. So I'll give you a small idea about how do people do a small trade. This is not really the this is one of the small tools or one of the small way of trade where people do everyday basis, where they could profit out of it or make profitability. There are various other types of trades. So that will be learning in our trading section. Try to give you a small idea how to choose, how a trade on a daily basis being done. Then we will step into the big world of fundamental analysis. Now, very slowly understanding few tools and covering certain data. How do we analyze it? Okay. To start off with, any share, we will understand what the market capitalization is. Market capitalization, as I told you last time, it is the total valuation of the company, the current valuation of the company. There will be X number of shares. For simple example, Reliance has about close to about 300 crore of shares. Infosys might have about 50 crores of shares. Total number of shares. The total number of shares into the current market value of share is called as market capitalization. In short, we call this market cap. This market capitalization is divided into mainly into three parts. Okay, you can see it here, called as large cap, mid cap, and small cap. Okay, most of the big companies, the market cap about 20,000 crore is called as large cap. Between 5,000 and 20,000 crore, it is called as mid cap companies. And companies which is about below 5,000 crore to about 1,000 crore, we call it as small cap companies. Apart from this, there are few companies running about 400 crore, 300 crore. All these are called as micro cap stocks. Ideally, we say that as per we recommend people to invest mainly on large caps and fundamentally strong mid caps, not on small caps and micro cap stocks. Okay, you have to invest in large cap and mid cap only. Mid cap, fundamentally strong companies only, and not on small cap and micro cap. Small cap and micro cap is highly risky shares. Okay. There's something called as blue chip stock. Or what are blue chip stocks? Blue chip stocks. Okay. Hi Adil, welcome to the session. I think Anil just joined. Okay. So ideally, we have to invest only on the large cap stocks and mid cap stocks only, because as I told you, the small cap companies, we don't know who are the investors, who are the owners, and what is their real agenda. Going forward, there's something called as a blue chip companies. All companies with high volume, that is highest number of shares, with largest liquidity is total number of shares which is being circulating in the market, buying and selling. These are called as blue chip stocks. Blue chip stocks are the best recommended. Always you have to go for blue chip stocks. Then comes large caps. Then the third option is mid cap. For simple example, Infosys, your Tata Motors, your State Bank of India, ICICI Bank, all these comes under blue chip stocks. Asian Paints, all these comes under blue chip stocks. Okay, as I told you, the market cap above 20,000 crore is large cap companies. I'll show you what is the market cap of few companies here. Let's take out, as I told you, a company called Tata Motors. Look at the market cap. Market cap is 1,38,663. It's much higher than your 20,000. Okay, so this is a large cap company, and this is also a blue chip company. The reason is the total number of shares, of Tata Motors. Show you here. Share capital. Can you see this 766, 768, 766? This is the 768 crores is the total number of shares available in the market. The value is in crores. You can see everything is in crores. Okay. So what happened is 766 crore, the value here mentioned here, into this value, 386.
380.
Yeah. This is into that is called as the market cap. That value is called as market cap. So the market cap, anything about 20,000 crore, it's called as large cap companies. Anything like this, like above 1 lakh crore and 2 lakh crore, is called as a blue chip companies. Nifty 50, and as I told you before, the index of Nifty, the Nifty 50 shares, all are blue chip companies. Who are part of Nifty 50 can be considered as blue chip companies. For simple example, I'll show you another company. Let's say we talk about Infi. Look at Infi's market cap. Can you see the Infi's market cap? 627 crores. Or 6,27 crores, sorry, 6,27 crores. This is the market cap of Infi. We are talking about 20,000 crores. This is much way beyond that. So we have to choose the company based on the market cap. Okay. So ideally, we recommend you to use to buy shares, which is about that is blue chip stocks. That also comes under large cap. The mid cap companies. There are few companies, that has to be fundamentally strong. You have to be really checking out the background of the company before investing in mid cap companies. There's something called as penny stocks. You would have been heard about penny stocks, penny stocks is nothing but the stocks whose current share value is below 10. There are for simple example, Vodafone. I'll show you what is the Vodafone share value today. Vodafone Idea. You can see the value there, 7 rupees 81 paisa. Okay, but they come under large cap because of the total number of shares. Okay, but it's called as a penny stock, but less than 10 rupees. We strongly advise people not to buy these stocks who are below 10 rupees. Because I'll show you the reason for it. Going down, in the same place, you could use the same app called Screener. It always gives you pros and cons because they have a liability of 10,000 crores. Can you see this? They have a debt of 10,000 crores. And the sales has been very average. They've been dropping from 2019 and 19. They have been dropping sales. Their profitability is dropping. Operating margin is dropping. You can see something called as OPM here. This is called as operating margin. Okay, even that has been dropping. There's one more. The income interest. Yeah, can you see this? The interest component, which they pay interest, it's been going up drastically. Okay, for 5,900 to 6,000. So that is one of the reasons that hence the losses are increasing. They're making a loss of 7,500 crore loss. Penny stock is just not advisable to take it. You never know what's going to happen. So these are pennies. There are many pennies also. You could see Suzlon is trading about 8 rupees. There is a stock there are many stocks that way which are trading about 2 rupees, 3 rupees kind of value. This is something very interesting. Okay, in stock market, you'll have to know that something called a circuit that is actually implemented only in India. What happens is, I'll open a new window here. Okay. For simple example, what happens? Nifty is trading at about, let's say 15,000 or let's say 18,200 currently. Okay. Suddenly what happens is, there's a massive incident. Let's say for simple example, there's a nuclear attack. Russia implements a nuclear warfare on Ukraine or somewhere, or China, or on US or whatever. It's very bad news for the market. So everybody starts selling, exiting their positions. They'll sell off the shares. Okay, they don't know what is going to happen, so keep on selling. So 18,200, everybody keeps on selling. Ultimately, if everybody sells, what happens? This will become zero. It will not become zero, but I'll give you an example. Everybody are selling it. So what happened is, SEBI has put a rule. In index, there is Nifty. If it falls by 10%, the market will be shut for about 1 hour. They'll close the market. This has been happened many times. So this is called as lower circuit. Lower circuit. When the market falls by 10 rupees, 10%, let's say 18,200. So 10% about 1820, about close to about 16,700 or something like that. It comes to that value. The market will be shut. The stock market will be shut. It will be shut for about 1 hour. After 1 hour, the sentiments of people should increase, should improve. Okay, people start buying it again. People stop. They don't sell it. If people again continue selling it, if it goes to about 20%, that particular day, market will not open again. It is called as lower circuit closure. Okay. This is for the index, so for the whole of market. Actually, what happened is the last circuit, what happened was, I think when India had a surgical strike on Pakistan, we had a lower circuit for about 10% shut. And when the market was closed for about 1 hour, by the time there was a press conference by the government saying that it only surgical strike and our soldiers have come back after the strike, nothing to worry. So it had gone to 10% down, again picked up slowly. Similarly, on 2014, I guess, when Narendra Modi had won the election after the elections with a huge majority, the market hit the upper circuit. Same way, the market goes for about 10% hike. The market will shut down for about 1 hour. Okay. Then if it again opens at 1 hour, goes for 20% hike, the market will be closed for the whole day. This is called as upper circuit. Upper circuit. Okay, this happened. The last time it happened, upper circuit was in 2014 when Narendra Modi had come into power. BJP won with huge margin because till that time, what happened was, let's say any Congress government, they were all coalitions. Many parties were joining together, and so that the stock market considered it's a very risky. Any party can pull out, the government might fall. So after a very long period, the single party is coming to power, so the majority. So we don't, since the stock market is not seeing any political uncertainty for next 5 years, the stock market really rallied high. And there are obviously, because of the Modi coming in, there are a lot of favorable companies like your Reliance and Adani really moved up. Same way, like for this index, for every stock or for any company, there is a upper circuit and lower circuit. Let me give you an example to you. Reliance says that we have got into a severe loss, or we are winding up our refinery, then everybody will be exiting the Reliance. Okay, that could be a news or a rumor too, but that is sufficient for the stock market to bring the share value price. I'm just giving a hypothetical stock as Reliance. There are many companies which is really happening that way. If you go to money control, you can say that whichever the companies hit the lower circuit today, whichever the companies hitting the upper circuit. There are many companies hitting lower circuit and upper circuit every day. Okay, so in the Reliance case, what happened is, in the Reliance hits about 5% downside, the stocks cannot be, we cannot sell shares. If it's a lower circuit, we cannot sell. But let's say the share was trading at 1,100, it had come to 990, or let's say about 10%. Keep it for example for learning purpose. 10% is 990. It came to 990. It did a lower circuit, so it's locked here. So nobody can sell further, but people can buy at this price. Same way, let's say Reliance comes and says that they got a huge order. I mean, the order maybe could be they got a huge order across India to implement all the petrol pumps by the government. There will be huge demand for land shares. It can go up. So again, 10% up. There are a lot of buyers happening. So this is called as upper circuit. That upper circuit, after 10%, people cannot buy. But at this level, you can sell. Okay, at that value, people can sell. This is called as upper circuit and lower circuit. That is there for most of the stocks. Most of the stocks, will have. For example, let me show you some share stakes today. Stocks, which is upper circuit. This is go to money control. It's only sellers. Let's see, we'll show something here. Look at all these are with lower circuit today. Percentage, because these are the values. Because maybe 18.97. Only Raj Nandini Mehta, they're at the lower circuit today. But these are not really low. They are only sellers, but they're not hit their lower circuit. The other things are 5% stocks are here. 4.98. LPT Forging. They're at the lower. So all these are lower circuits. All these 5% thing. At 4.98, 4.97. All these are lower circuit stocks. Same way, you could also see upper circuit stock. Because today market had fallen drastically, very difficult to find the upper circuit today. But still we'll see. What is there somebody? Yeah, good. You could see 20%. Okay, this is some calculation. Like Capstan service, it hit a 20% upper circuit. Okay. 19.99%, all these are upper circuits. Okay, TVS Electronics, TVS, surprising. TVS has hit an upper circuit. There could be some news on that. TVS Electronics, this company has hit the upper circuit today. It's a very good listed company. And we'll see today what happens. So going to screener. TVSC, TVS Electronics. Okay, it's the upper circuit. But TVS Electronics, can you see the market cap? It's a small cap company, 657 crores. Face value is 10, value is 53. Is there any rules? Okay, one of the reasons is company is expected to give good quarter results. That could be one of the reasons. Not really sure. Is there any news happening? This is the spike happened today. From 300 to 360, almost 353. This is a spike that happened. So this is called as, so though there'll be a lot of buyers, people cannot buy because it's locked at 20%. 20%, correct? Yeah. I think 20%. It's locked at 20%, 19.99%. Imagine one stock giving you 20%. The investment of the investment of about 10,000 rupees giving 2,000 rupees in a day in stock. Basic. So these are called the circuit or circuit breakers, So this is one of the tool which has been implemented by SEBI in Indian markets. So the same thing is not available in other markets. Because let's say if you go to US market, your Microsoft share have fallen about 35% on one day. The Tesla has been falling almost 25 to 30% every day. Okay, so Tesla is falling after Twitter. After that, Elon Musk took over the Twitter. That particular day, I think this Tesla share fell almost about 42%. Same way, even your Nasdaq, there's no circuits for them. It can fall any percentage. So to protect the investors in Indian market, our government, I mean the SEBI, has implemented the circuits. So there will be some occasions when you wanted to buy a share, just a lot of news, you will not be able to buy that share. You have to check out whether that share has hit a lower circuit or upper circuit. If you're not able to buy it, upper circuit. If you're not able to sell your share in the market, which is already holding it, that could be because of your lower circuit options. Okay. So after shares, we will get into something very interesting. Long and short, as I told you before, long is buying and short means selling. So when you bought a share, when you say that go long on Infosys, you will buy Infosys share. But when you want to sell it, the share what you're holding it cannot be called as short. The short are the shares when you sell it, when you don't have a share, that is when we call it a short and then selling it before buying it. Okay. And if you have a short, buying, you sell it first, then buying is not called as long. So what happened is when you go long, the other when you buy the share, selling it is called a square off. Short, when you sell it, then you buy it, it's called a second square off. Okay, I'll show it to you. For simple example, Anil wanted to buy a share of, let's say, Tata Motors. There's a call saying that go long on Tata Motors. So Mr. Anil will buy the share for about 385 rupees. Currently, the Tata Motors is trading at that value. Tata Motors would have been gone up by about 15%. So Mr. Anil will wanted to sell it off about, let's say, about 405, 410 rupees. The selling here is called a square off. You're holding something, you're squaring it off. Okay. Same way, what happened is today this is a result saying that Infosys today evening Infosys is given very bad results. Every day what happened, every quarterly, every 3 months, Infosys gives your results, quarterly results. This the last quarter, that is October, November, December, that's a third quarter. That quarter results of Infosys is supposed to be given on 12th of Jan. Let's assume today's 12th of Jan. The market closes about 3:30. The Infosys given a results about, let's say 6 o'clock. They declare the results. The results are very bad. So tomorrow, the experts say that go short on Infosys. So what happened is, Anil, the morning, Infosys trading at 1,500 now. Morning, okay. Thank you. Okay, so this is what is a long and a short. Okay, the other jargons what you learned was, and when the market is uptrend and downtrend, when the market is going up, it's called as uptrending. The market is going down, it's called as downtrend. And the market is sideways, we call it as range bound. And I spoke about gap up and gap down. I think there's some error here. I think gap up is after the previous close, and the market opens next day. There's a huge gap between the previous close and previous the current opening. It's called either gap up or gap down. There's something called as bulls and bears. Bulls and bears are the people who are actually trying to take the stock value up. It's called as bulls. There are people who drags down the stock value, called as bears. And the market is totally every day going up. It's called as bullish market. Or the stock which is going up every day is called as bullish share. When the market is falling continuously, it's called as bearish market. When the stock is falling, it's called as bearish. The stock is bearish. Positioning, long position is when you bought a share and holding it, it's called as long position. When you sell first and holding a position, it's called as short position. The reason is, I'll show you a small example how we are going to, then as I told you, closing the position and you go long, exiting is called a square off. When you go short, exiting is called a square off. I'll show you today a small demo how we could do that. Intraday is a trade which buying and selling or selling and buying happen the same day. When there's a momentum, the stock goes up, it falls down, again goes up, or as the index goes up, falls down, again goes up. This is called as volatility. Yeah, all right. Then comes liquidity. The total number of shares which has been sold is very high. This is called as high liquidity. There are many buyers and sellers. That is called as liquidity. Let's understand a kind of a hypothetical treatment. Okay, as I told you before, I will give you a small demo about how people survive on daily basis on stock market. I mean, we are all investors. We all buy shares based on the our fundamental analysis. We choose the share. Everything is fine. But I would like to give a small demo about how people survive on a day-to-day basis in stock market. Okay. Today, let's assume there's a news which has happened yesterday. There's a budget coming up shortly, and government is planning to expand massively your rail network. So they're planning to create a lot of railway infrastructure to be developed and everything. So in that case, there's a company called as RVNL. RVNL is a company called as Rail Vikas Nigam Limited. Okay, they work on railway infrastructure development and everything. So today, what happened is this share is supposed to go up. There are many other shares supposed to go up, but let's assume Rail Vikas Nigam Limited. So as a trader, there's a call in the morning saying that go long on RVNL. People have said to go long because of this news, go long on RVNL. So let's take up the share of RVNL today. Let's see what is the price of RVNL. RVNL. So RVNL has gone up to 2.02. Okay. So there's a price of, you could see the low price of 72.35. I'm just giving you this is not the trade we're going to take, but I'm just giving you a small indication. How does this work? So what happened is 72.35, let's assume it's 73 only. Let's talk about 73. Or let's say in the morning, the market opened at 73.55. Let's take that value. So the market opened at 73.55 in the morning. It's a long call. So what people should do? It's an intraday trade. It's a purely intraday. We have to square up the same day. Okay. Let's assume Mr. Srinivasan have a capital about 5,000 rupees. So today call, because of RVNL, Mr. Srinivasan can buy. How many shares can you buy? Let's say for assume. Let's take a calculator here. Calculator. 5,000, let's say 5,000 divided by 73.5. About 68 shares. So about 68 shares. Srinivas can buy in the morning. Srinivas can buy in the morning. So since it's a long call, the target, we have something called as risk and reward. Okay, risk and reward ratio. The risk and reward ratio is 2:1. Okay. So what happens is 2:1 instance, either the price should go up by maybe about let's say 2%, or it should fall by 1%. Or it could be other way also. The price should go up by 1%, and fall by 0.5%. Anyone happens first, we are exiting the trade. Okay. So RVNL 73.5, 1% is about let's say 0.7 paisa. I'm right, approximately 0.73 paisa. Okay. So what happens is, go here, we will see what is, so the RVNL have gone up to 75 rupees. So at 75 rupees, the moment it got to 75 rupees, Mr. Srinivasan exited the trade. 75 into the total number of shares he bought is 68, right? Yeah, 68. So into 68. So 75 into 68. 5,100 rupees. 5,100 rupees. So this is our total number of shares. The profit he made, Mr. Srinivasan, about 100 rupees. Okay. Let me see whether I could show another easy trade for you. But what happened is there's something called as leverage. I want to see it in this RVNL. If you buy it, because there are only, see what happened is there's something called as, I'll show you that one. So what happens? The stockbrokers, we would even open the account with maybe a lot of companies, zero the profit what Srinivasan made is about 100 rupees. But for 5,000 rupees, 100 rupees is about 0.5% is the profit, approximately. Is it 5%? After 2%, approximately 2% is the profit. So in Zerodha, or let's say Upstocks, anybody, they give you something called as leverage. What does the leverage mean? See, leverage is giving you additional credit because it's an intraday trade. They know that your trade, you are going to exit the same day, come what may, your loss or profit. So they tell you that as of now, Zerodha gives you 5x leverage. What does that mean? That means that you could, with a capital of 5,000 rupees, 5,000 rupees capital, you can buy 5x, that is 5 times, up to the shares worth about 25,000 rupees. Okay, so what happens is, in this case, into 5 in the sense, so you could see it here. How many shares did you buy here? You could buy 68 shares, 5,000 rupees, you bought 68 shares. Okay, you could see it here. You bought 68 shares for 5,000 rupees. But since you have a leverage, you can buy up to 68 into 5 numbers. That is, let's say 68 into 5. It's about 340 numbers. About 340 shares you could buy for 5,000 rupees. So the 340 shares, you buy it for about, what is the value? What is the value you bought it for? We bought it for about 73.5, and we sold it for about 75 rupees. Okay. So 340 into 75 into 75 is about 25,500. 25,500. So what happened is, it's not exactly 75. I'll show you the demo. How does it work? Approximately the profit is about, you bought a share 5,000 rupees share up to 25,000 rupees. The profit what you made is 500 rupees. So 500 rupees the profit you made. That is 73.5. Okay, 75 minus 73.5 is about 1 rupee 50 paisa. 1 rupee 50 paisa into 340 shares. This is the calculation. So it's about 5,500 rupees of profit. So your actual investment is about 5,000 rupees, but you have made a profit of about 500 rupees. That is about 10% average. So this is the calculation. Going forward, I'll show you a small trade, because today what happened, the market had actually fallen. I'll show you the reason for that. Let's say here. Okay. Okay, this is today's Nifty market. You could see today what happened in the market. Okay. This is the point when the market opened today. It started falling. And it opened at about 18,000. What range did it open? It opened 18,200 range. 18,246 range. This is a range. 18,200 range it opened. It started falling. It closed at 18,032 level. It's a lower trending market. So today, instead of going along, RVL it's a kind of example I showed. Today, for simple example, you could see Sun TV here. It fell about 1.73%. You could see it here. Sun TV, 478 rupees. Let's check out Sun TV chart. Can you buy Sun TV? Let's say. Okay. Sun TV, the open price was somewhere here. Today's third, fourth, right? Yeah, today's fourth. This is fourth. You could see here 4. Okay, you could see the value here. 487 was the value in the morning. This is the value here. So morning, Sun TV. Let's assume the Sun TV is a short. People say they go short on Sun TV. So what you have to do is there's something called BNS, buy and sell. Okay. So when you go short, what happens is you go for sell. So what happened is this is the value. 478 should be the value which should be given. Okay. If you go for intraday, that's today. What happened is the actual price is 478. Can you see the value here? 95 rupees. That is because you chosen intraday. You have to pay only 1/5 of the value. Okay, so you could for let's say for what value can you, let's say for about 100 shares. I would say 50 shares. The amount required is 4,784. You could see it here. Ideally, for 478, you could get only 10 shares. But in this case, you could buy 50 shares. Can you see this? I've chosen intraday here. Because of it, though that is reason is it's a sell call in the morning. So I'm selling Sun TV in the morning. So the morning price is about 485. 485. Yeah, 486. Whatever. So 486 is a margin. I could buy only 10 shares, 4860. But since it's an intraday case, I could I could buy almost about 50 shares for 5,000 rupees. So, the market is closed, you have to just sell at that value. There's a charge of about 15 rupees for this trade. That is the brokerage charges. So what happened is the moment you sell for 486 rupees, the value comes to 486 sell at about 476, whatever the current value. The current value is how much? 478, correct. At 478, you have to go to the position, say square off. So what happens is your buy price is 4784 and your sell price is what happens? Your sell price is 4860, almost about 100 rupees is the profit what you have made. Okay, 100 rupees profit for a profit of for a value for about 5,000 investments, about almost 2%. So this is called as the square off and buying and selling. We will learn this in detail in the new video. Just an indication for you. Just don't really bother about it. But just to give a small indication, how does people trade on the market? People have a huge value there. They can trade for about 50%, 1 lakh rupees. What happens is, if they sell for about 1 lakh, they will buy about 500 shares. The value goes to almost 48,000 rupees. 48,600. They sell for 48,600 and buy it for about 475 or whatever. So 47,800, almost 1,000 rupees margin for 5,000 rupees. The per day trade. Okay, this is the kind of margin people make. So you sell first, and later in the day, buying is called a square off. This is how the people survive daily on the market based on the news and the events. They try to do the trade. Okay, so I'll show you a small calculation here. There are few brokers who give up 20 times. Zerodha's give only 5 times. There are few brokers give you 20x leverage also. You can buy shares without 20 times of the value. Okay, this is a small calculation. Just before going to next slide, we will talk about okay, this is what it is, a calculator. Let's assume we're talking about 2% every day. 5,000, let's say the total investment. We will talk about that is 2%. What today's trade we made a, let's say we showed you the value of how to make 2%. Let's assume there are about 5 trading sessions in a week: Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so let's assume we make 1% maybe. Let's assume we'll make about 0.5% maybe. That is about we make multiple trades. Some trade we make a 0.5 loss. In some trade we make a profit of 2%, 1.5%. But actually, end of the day, our profit has to be 0.5%. If it is 0.5% per day, we make about 2.5% in a week. So let's put it 2.5%, and we'll make it in a week. 5,000 rupees investment. Based on news, we do it. I'm keeping a very, very low kind of a situation. Okay. Let's assume we will be trading for about regularly. This 5,000 we will not remove it. Sometimes we can have it also. This 5,000 rupees, we talk about 2.5% a week. Let's assume it's about 5 years. Or let's keep it as about let's keep it as 5 years. Okay, the same amount we invest. Today we take it 5,000 after 2 months. Let's make it as 1 year for simple example. Okay, let's calculate 1 year. How much is the money we get it after 1 year? We get about 17,000 rupees. Okay, 5,000 rupees. For every day, every week we make about 2.5%. Okay, we make so much. Okay, we do the same amount again. Again, the same concept of 0.5% in a day, 2.5%. Okay, we will keep it as 3 years. You get about 2 lakh rupees out of 5,000 rupees. Let's go back here again. We'll make it 5 years. You see the value? 23 lakh rupees. This is the power of compounding. Seven years. You have hit 2 crores. With a minimal of 2.5% in a week. So people trade on markets. This is one of the trades. What happens? No, a lot of people survive with this market based on this kind of trades. There are different types of trades. We will be learning that in our trading classes. But just to indicate, the potential of Indian stock market, because you will think I will invest in a share, the share grows. Yeah, that is a long-term investment. But trading can actually give you money based on this. Okay, there are few factors. It doesn't mean that always you make this profit, but there are few factors which will make us loss, but that has been covered. That is called as hedging. You'll be learning in our period of time. Okay, so this is what is called as intraday buying and selling. There are different types of intraday buying and selling. Okay, what happens is if you buy intraday, you have to sell the same day. If you don't sell it, automatically a broker will sell it off. The leverage is given based on that. Okay, this is what it says. Intraday trading refers to buying and selling the stock on the same day before the market closes. If you fail to do so, your broker may square off your position. This is called as leverage. You understand what a leverage is? You could buy 5 times the share if you're taking a trade in an intraday. Now, as I told you before, I leave that trading just for that chapters are just for indication for you. We will be learning in depth trading aspects future classes, because it's not as easy said and done. It cannot be just go pick up a share and make 5%. No, it's the most riskiest way of handling it. Unless and until people don't learn that skill, we recommend no trading in stock market. You have to learn that skill. You'll have to understand the basic, how does it work. It is just for you just to give a glimpse of what is the potential of stock market. I shared you the content. Okay, we will be learning. You will have to learn, practice, and skill yourself before doing a trading. So let's keep that trading aspect at that position. We will learn that in future classes. But let's get into the serious subject of the investing, part of it. So what happened is, as I told you before, we have spoken about FIIs and DIIs. That is called as institutional investors. So institutional investors, they are the big people. As I told you about, foreign, there are about 30-40% FIIs, about 20-30% of DIIs. The government has given them a lot of leeways. So they are not really regulated because they are the people who are running the market. So they have a less regulatory oversight. They can dictate terms, okay? That we have to understand. So we cannot really fight against this FIIs and DIIs. We have to only sink in with their trades. So that is where we have to be very cautious, because government has given lot of facilities for them because they invest big time in the stock markets. So they have given a lot of leeways. They give a lot of excuses, a lot of activities because they are considered as a savior. The spelling is wrong. Savior for the stock market. So the market is falling huge because what happens? I'll give you a small example. After 2008, there is a major recession. When the Lehman Brothers collapsed, all stock market fell drastically. Even Indian stock market fell drastically. We were trading at about the stock market is going around 10, 11,000. The stock market fell to almost 6,000 points in Nifty. What happened is that is FIIs, foreign institutional investors. They sold big time in the market. They exit all the trades. They sold off all the trades. They sold close to about 1 lakh crores. Hence, Indian stock market fell drastically. 2008. But do you know something? In 2022, as of December 31st, the FIIs sold 2,85,000 crores. The major, almost double than what they sold during the Lehman Brothers 2008. Then after 2008, they sold. So this is the biggest year when they sold so many of shares. They have exited all the positions. Almost 2 lakh worth of shares they exited. They sold. But still, Indian market is highest performing market in the global market, where we never fell. 18,000 we just hold on to our position. That is because our DIS, domestic institutional investors, equally pumped in equal amount of money or more to keep our markets up. Okay, the companies like LIC, companies like all the insurance companies, everybody had sold, bought equal amount. They almost bought 3 lakh crores to keep our market sustained. Our market never failed. So we have a very strong mutual fund markets. People, we all invest in mutual funds. We buy insurance. All this money have gone into stock markets. Okay, so these are the institutional investors. You have insurance companies, pension funds, a lot of universities like Indian IASC invest in the stock market, private equity funds, mutual funds, banks. Everybody are the institutional investors who have been pumping in money. Okay. So these are, as I told you before, FIS stands for foreign institutional investors and DIS stands for domestic institutional investors. HNI is high net worth individuals. HUF is nothing but your Hindu undivided family. There's an act called Hindu Undivided Family Act, which is implemented in India, where the people invest in the stock market. There are corporates available. Okay. Now we will step into something called as fundamental analysis. As I told you before, fundamental analysis is to understand the companies better. When you plan to start a business or you want to invest in some of your friend, you will be looking forward what one friend is doing, what kind of business is doing. As I told you before, I don't want to stress much on that. You will have to check out the promoters, who are the owners, what the background is, the past business understanding, the past business history, and what are the opportunities that particular business. Let's say, for simple example, there's a share for DMart. DMart, DMart is a heavy potential. A lot of people buy stock from DMart, buy their groceries from DMart, and they've been overcrowded always, and they're expanding in a massive way. So when we talk about any grocery purchase, we always recommend buying DMart. So there's a big opportunities. Okay. So that is what we are going to get into. We will get into there are many points to be considered. So we'll consider only 1 or 2 points every day. Okay, to learn about fundamental analysis. What happens is, there's a share. For simple example, let me understand. Let me take a share of Titan. Where is Titan here? Okay, let's type Titan share. Titan company. Okay. So this is the value of Titan. Okay. In April 2005, Titan share was trading at about, that is 2008, sorry, 8 April 2005, trading about 12 rupees. Okay. So current market value, it's about 2,600 rupees. Okay, 2,400 rupees. So we are talking about the increase of 2,500, I mean 3,000%, 2,500%. So this is called as absolute growth. Okay, from 12 rupees, Titan gone to almost 2,600 rupees. In this growth, we call it as maybe about, let's consider 2,500% whatever. This is called as absolute growth. Okay, total value the Titan is given over a period of so many years is so much. But we'll have to see what is the percentage of growth the company is providing year on year, because your fixed deposit in banks is giving you interest every year. So we have to calculate that. So for that, we call it as CAGR. CAGR is nothing but compounded annual growth rate. Compounded annual growth rate. So what happened is, this indicates the growth that company is providing you year on year. Okay, let's get into that. Okay, the compounded annual growth rate is the annualized average rate of growth rate. So let's get into the stuff called screener. That's where we have to get all the details. Okay. So Titan company. Okay, you could see the value here. Face value. Face value is the value when they started the company. The share value of the thing is called as face value. You could see a book value based on the profits they make. It's called the book value. And current price. This is a current share value of the company. I think most of you understood this. So you could see another thing called as add ratio to table. You type CAGR. So you could see return over 3 years. Can you see this? Okay, return over 3 years. Add it. I think I have to log in for that. I will. Titan company. Okay. We will type CAGR. Can you see this? Return over 3 years. Titan is being giving last 3 years. Titan is giving a return of about 31%. go back, say return over 1 year. But can you see the last 1 year, what is the return rate is given? 0.5%. Return over 5 years. Can you see this? 23% returns Titan has been giving last 3 years, last 5 years. Because of maybe COVID or whatever it is, return of current year may be lower, but still Titan is giving wonderful returns. So this is what we need to check. Point number 1, CAGR of a company. You choose after, you can keep on adding here the add ratio table that be permanent. So go back here. Let's type again TVS Electronics. Okay, TVS Electronics given about last 3 years is given return about 46%. Last 1 year it is given 88%, but over 5 years it is given negative growth. Remember I told you initially that market cap, small cap is always risky. That is the reason. Okay, so that they may give you a good return short period, but we have to looking at long period. They're given a negative growth. That is after giving you 88% last 1 year, the losses come to 2%. If not, the loss will be much bigger. Let's take an example of about company called Asian Paints. Last 5 years, 3 years, 19%. Last 1 year, negative growth. That is because of COVID, I guess. Last 5 years, continuously giving 20%. They always are known to give 20% returns. Asian Paints. But recession, sometimes, really puts you in a bad shape. Let's get into another company called Tata Motors. So I think everybody should have this screener log. Just create a free account. So that is where you could have a data analyzed there. Tata Motors last 3 years giving 26%. Last 1 year minus 22, 21%. Last 5 years it's still negative. Tata Motors has always been this kind of a company, ups and downs. It's a better stock for a swing trade. You make 10%, exit that stock. SBI, State Bank of India, always consistent. Last 3 years, 22%. Last 1 year, 25%. Last 5 years, almost 15%. Double than the bank interest. These are few. These are called as blue chip companies, which you could choose for your long-term investment. This is one of the indicators. Okay, there are many indicators to be learning in the classes, because only based on this you cannot go for it. Okay. As I told you, we have to understand. Okay, when you take up out, you can go back here. Let's assume, let's go to TVS Electronics. Again, for a reference purpose. So before seeing these returns, you have to go to a investor's quotient. Okay, you could see investors. Who are the investors here? As I told you before, there are promoters, there are FIIs, DIS, and public. Public are people like us who invest in shares. Okay. Oh, no wonder. You know why the share has gone up? You could see FIIs here, and FIIs has increased it in September. They've gone a huge chunk. They doubled the share investment. They've doubled it. That's one of the reasons that people have gone ahead with that. Okay. So if you go to promoters, you can see a plus here. You click on the plus, you will see who can see who the promoters there. TVS Investments, Harita Properties, it's a Gopal Srinivasan. They are the investors of this company. They are the promoters of the company. If you click on this plus here, FIIs, there's no details. In DIS, they should get more details. It's not available. There are no more details. If you click on the plus, they'll give you who are the people invested there. For simple example, let's get into another company called let's say HDFC Bank Limited. Go to investors. The promoters I mentioned here. HDFC, all these are promoters of it. You could see FIS, press it. These are the FIS investment. Government of Singapore, Euro Pacific Growth Fund. Plus on this, you get these are the DIS. LIC has invested. Can you see LIC here? They've invested some money in HDFC. Government, they've invested about close. Indian government has invested 0.6%. Public, there's not much details about it. Let's get into Titan. Go to investors. Who are the promoters? Tamil Nadu Industrial Development Corporation, they are the promoters. Tata Sons has about 20%. Okay, Tata Investment about 2%. FIS is a Tiger Fund. Matthew Pacific Tiger Fund is invested money. DIS, LIC again is invested in Titan. Government is invested. Public, this is what interesting is. Go to public. Can you see there? Junjunwala. He's been investing big time in Titan. They are called HNIs, high net worth individuals. If they invest, their names reflect here. Apart from people like us who buy, so this is how you have to see. You have to see who are all having invested in this company. So the first tool is to understand the background of it. If you go here, top, it'll talk about what Titan is into. Okay, they're the most lifestyle products and all these things, and do a detailed analysis of that. Then go to the people who have invested in Titan, who are the promoters, who are the investors in Titan. Then take a call on it. After that, you see what is the return they give. CAGR, 3 years, 1 year, 5 years, or there are sites who can give you up to 10 years also. I'll show you those sites next time. Okay, to learn about it. So these are one of the tools to evaluate the company. Okay, CAGR. Then comes another indicator. It's called as EPS. What is EPS? Earnings per share. It is the total profit of the company divided by the total number of shares. Okay, so you go to that indicator again, you could see EPS somewhere here. Is there EPS available here? No, EPS is not there. Go to ratio table, type EPS. Okay, put on EPS. Can you see EPS? So as per the profit per share, shareholder, the company has made a 35% profit per share. So legally, every shareholder is supposed to get 35 rupees every year's profit. That they can give it your dividend, or they might add it to the value of the share. The earning per share, EPS, is what is the profit every shareholder will make, total number of profit divided by equal number of shares. That is called the earnings per share. That is what shareholders like us are trusted on. Okay. So you could go to this place called add ratio to table. You could type anything, whatever you wanted to type. Let's say book value, it will show down book value. Okay, anything, already available things. So there are many tools which we need to keep on adding to our time. That is the reason I told you to log in, create a free account in Screener. You'll be able to learn in future. So by the time we finish this fundamental analysis, okay, our this one, I'll show you how does it look. We get out of it. I'll show you another account of mine. Let's type again. So I have put some values here, totally different. No, this is how that by the time we complete the classes, we will understand how to analyze lot of data, because our screen to be looking something like this. So NP annum, this is called as net profit per annum. They make about 2,198 to net profit. Okay, price to earnings, return on assets. We will learn everything of this. Debt to equity. What is the loan the company owns for every shareholder? This is about 0.7. It's very good. We will be learning all this data in future classes. So I think we will more or less post it today. From next Saturday, we will try to cover more of fundamental analysis and take it forward. Okay. And the one more thing is maybe you should all have a Demat account open, so that we could have a hands-on experience. Maybe you'll be adding more shares to that, and you'll be understanding, so that you'll have some doubts. You know how to maybe buy 1 share or 2 shares, no problem. Okay, if you have some doubts, please ping us in the group, or talk to us personally. We will help you out. And in EPS, always the higher EPS is better. Just consider that. There's one more data that's available here. Okay, when you take up a Titan here, you could see peer comparisons. Peer comparison nothing but the similar kind of companies: Kalyan Jewelers, PC Jewelers, Tagamail Jewelry, all this. So you could compare the data here. So I think the P is edit columns. I'll add one more column here. Add EPS for simple example. EPS. Okay. So what happened? You can compare between the similar kind of companies. So always think that the tool, first one is CAGR, as I told you, compounded annual growth rate. That is important. Okay, you'll have a better growth. You have to see the last 5 years or 10 years growth rate before investing in that. Second tool is EPS, earnings per share should be good. And also in EPS, you can also compare the last 3 years EPS. Okay, you could go here and type, go here and say EPS last preceding year. It's about 11%. That is the previous year they gave EPS about 11 rupees. This last year they gave 35 rupees. The last previous year they gave 11 rupees EPS. So you can consider that also data. So these are the few things that we are going to cover today. Hope we will try to wind up today's session. Okay. Let's get into this and yeah. So today we understood the basics of fundamental analysis. We have to understand what the company is into before buying any share. Who are the promoters of the company? We told you how to look into the promoter active. Who are the promoters? Who are the investors? Then comes what is the growth rate the company has been providing last 3 years, 1 year, 5 years, 10 years also. Then what is the amount the company is making for every year? So these are the 3 tools that we learned today. The next class we'll try to learn something called as PE, price per earnings, ROCE, return on capital employed. All these things all are very easy to understand. We will ensure that you will learn that slowly. Next 2 or 3 to 4 classes we'll try to cover the whole of fundamental analysis. In the next class, we will have it on a Saturday. Kindly share in a group. You choose about 4 or 5 companies where you want to invest. Based on your CAGR and EPS. Okay. So kindly do a small homework and and let me know which are the companies you would like to invest. We'll discuss in the next class. You could also post it directly to us or to the group also. We'll discuss. Okay, so that it will be helpful for you all to evaluate the companies. Okay, any doubts as of now?
No, sir. Clear.
You are clear, Mr. Srinivas, clear till now?
Clear, sir. Clear.
Wonderful. How about others? Anil, things are fine?
Sir,
Yeah, Rijita.
sir, these classes have been recording, right?
Yeah, I'm recording. Yes.
So can we get this recording, sir, of the class?
Yeah, I'll be sharing them because I need to edit this and upload in one of the sharing sites. I'll do that and share it with you.
Yeah, sir, it will be helpful to be.
Yeah, you will get all the classes recordings, Rijita.
Yeah.
Okay. Yeah, but Rijita, any notes for you to as of now?
No, sir.
Okay. So no problem. I'll share the recording shortly. Mr. Nikit, hope you understood things. Thank you, Mr. Anil. Thank you. Mr. Nikit.
Yes, sir, I'm following.
Yeah.
But with practice, I think we'll have more questions, and then you can answer us. I'm saying currently I'm following.
Okay.
But with practice, we'll have more questions.
Yeah, you have to.
Yes.
You have to start slowly. I mean, start investing slowly before investing. So you know how to evaluate the company on the base level now. Then start investing the shares. Maybe as I told you, the CAGR is there good. Then you're talking about EPS. Based on EPS, you cannot buy any shares. There are other tools. When you check out other tools, then you will have to see whether to buy that share or not to buy that share. Okay. So you will be learning the other indicators also. So then by the time I think going forward, you'll definitely get an idea to which share to buy and which not. So also you'll have to the certain news events can help you buy share. Guru, how about you? All fine?
Yes, sir. I'll understand.
Super, wonderful, super. Kritik, Lohit?
Yes, uncle.
Wonderful, super. Okay.
Yes, uncle.
Super, excellent.
Pradeep.
Okay, so
Pradeep.
come out with certain shares what you have shortlisted for this week. Maybe this Saturday we'll have a session at 6:30 p.m. I'll try to cover some more fundamental analysis, and we will take it forward. Maybe after 10 classes, maybe we should be 5-6 classes. We'll be able to get into the trading section of it. We'll understand. That's when we'll try to read what a graph is, what a candlestick is. So I'll try to definitely, Ms. Anil, I'll try to upload this content very soon in the online, in one of the maybe YouTube or something. I'll upload and share it across to you. Yeah. So any doubts?
Pradeep.
Yeah.
Pradeep, we will start imposing fine for all those who don't open Demat account.
Okay,
Guys,
I think Zerodha
Demat
charges
account
about
is
400
really
rupees.
important.
That is Zerodha has a lot of good user interface. There are other accounts like Angel One and Upstocks and PayPaisa, all are free accounts. You can have multiple number of Demat accounts, no restrictions on that. But one broker, only one account. Multiple brokers can have multiple accounts. So I think once you start buying it, then I think you'll have more doubts to ask, so that it will be easier for everyone to learn. And because there is more technical things happening, which is really interesting for you to understand. There are some tools called Sensible, which will be integrated with your trading app, where you could see if you take a trade, will you be profitable or will you be lost? What will be a maximum loss? What will be maximum profit? Everything can be analyzed. I'll be covering that too over a period of some time. It's a tool of Sensible. You will be learning a lot of, we actually seeing the future of our trades. Okay, before that, we'll understand the basics. Okay. Thank you so much for joining. Happy New Year to all once again. Okay, so we'll definitely do a lot of progress in this year, and maybe after a few months we'll be definitely be a good traders.
Thank you, sir.
Thank you all.
Thank you, sir.
Thank you.
Bye. See you all.